Hello, everyone. My name is Ken Wells, and sorry about the delay there for a minute, little technical difficulty. And we're going to give it just a minute so everyone can get hooked up and joined on, and then we'll get started. So just give us about 60 seconds and we'll get rolling. So let me go ahead and make introductions. My name is Ken Wells. I'm with the Hospitality Association here in Washington. We're here to have our first webinar on insurance for COVID-19. The goal here is to make sure that, well, actually, we've been getting a lot of questions on insurance, so we're covering 4 major topics. But before I discuss the topics, I'd like to introduce Patrick Mayhew, the account executive over at Parker Smith & Feek. Wave, Patrick. Jim Chesmore, the Chief Operating Officer at Parker Smith & Feek out of their Bellevue office. Jan. And then Tristan Swanson, a partner at Miller, Nash, Graham, and Dunn in Seattle. They're on the panel that we have today to discuss the topic. And the topic's here because really we're getting a lot of questions on insurance. So we're going to cover 4 major topics. One, and the one we actually get the most questions about, is business interruption. 2, making adjustments to my policy. An important time to be considering that as well. The Insurance Commissioner's Emergency Order 2020-03, the premium grace period, and then food delivery coverage for self-delivery. And also those that are using third party. If you're using third party, you can be using your own employees or carrier. That's one of your options. And I'm going to save at the end a site that you can go to today, sign up. It can market your delivery service if you happen to be using your own carriers or are thinking about that in the future, your own employees. So you can potentially move away from some of these expensive third-party programs, and or at least bring down some of the cost of that and move some of your regulars to it where it doesn't cost you the 30% you're paying between marketing and delivery fees. So I'm saving that nice little tidbit for the end to keep you on, okay? So our first topic will be business interruption. Given that we're now 3 weeks into this unfolding crisis, Patrick, could you give us an overview of the current claims landscapes, what the current best practices recommendations are for members who have been shut down or slowed down from COVID?
Sure. Good morning, everyone. Thank you for joining us. From a business interruption standpoint, I'm sure a number of you have begun your inquiry into your insurance programs relating to filing a claim for business interruption and impacts from COVID. At this time, our recommendation is for anyone who's experiencing an interruption or a slowdown in their business due to the current environment to file a claim. And I think importantly, I want to kind of break that into 2 pieces for you. And I think the first piece is why file a claim, and then the second piece is how to file that claim. So from a why to file perspective, I think there's 3 major reasons that we're recommending it. First and foremost, every single insurance policy is different. There's no cookie cutter policies really out there. They're written for the individual insured based on their operations. Likewise, members run businesses very differently from one another, and there's different impacts to an individual business based on how they're operating their restaurant or other hospitality venture. And given those kind of nuances and the highly specific nature of coverage language, it's super important to review that and to file a claim and to document your insurance company's coverage position. So I think first and foremost is just you have an insurance policy and you need to understand how your insurance company interprets that language that's in there based on the situation we're in today. Secondly, there's a number of rumblings that some of you may have heard about on a national and state and local level across the United States right now. There's sort of been a groundswell of support and conversation around potentially governmental authority, such as a legislator or the federal government stepping in and forcing insurance claims to potentially be paid by insurance companies. At this time, that seems to be a little bit far away from where we are, but if and when anything like that takes place, filing a claim today puts you in position ahead of everyone else that's going to wait and hear that and then go file their claim and further sort of bog down that process. And I think last we've seen other types of relief programs in the past related to certain events that have required some type of documentation around what your insurance company said about a claim. Basically, the relief programs wanting to understand if you've been made whole elsewhere, how that fits in with them helping you through their program. As of now, I don't believe, and we have not had a number of inquiries for this as it relates to the Paycheck Protection Program, but if any other types of programs come along, we have seen this in the past. And so doing it now would allow at least that process to be started and you well along your way. And then now on the how to file a claim, I'll oversimplify what this looks like, but essentially anyone here should be working with their insurance broker and doing a thorough coverage review of their property policy right now and trying to identify where you want to push the insurance company to review coverage for your claim and to identify specific coverage items that may exist within your policy. Some items such as business interruption, potentially civil authority. We see a number of industry specific endorsements that may or may not provide coverage that are super specific in how they're written from a coverage perspective that the insurance company and you and your broker should work through and figure out where that, the rubber may meet the road on that. So the step is really to get in contact and to do a deep dive on that policy document and try to craft a claim argument that your insurance company needs to respond to.
Okay. Thank you. Thank you, Patrick. Tristan, I think, given that a lot of these insurance carriers, they're not going to give an inch when it comes to business interruption claims. What specifically should members be looking for in policies for this COVID-19 pandemic coverage?
Yeah, thanks, Ken. I think the most obvious starting point is that you want to look at your policy and see, does it have a virus exclusion? If your policy doesn't have virus exclusion, congratulations. You probably have coverage, or I would tell you that you've got a very good fight to have coverage in Washington State. Unfortunately, most policies do have virus exclusions. If that's the case, then you're, to reiterate what was just said, you're probably looking at civil authority coverage. That's coverage that's going to provide you coverage when usually a covered peril happens somewhere else, causes physical loss or damage. And because of that, a civil authority blocks access to your premises. Those coverages, that's generally what those coverages provide, but they're all written differently. So for example, I've been looking at a bunch of Allianz policies where the requirement isn't that a covered peril happens somewhere else, just that physical loss or damage does. If that's the case and there was a virus somewhere nearby, I think those people have a credible claim for coverage. So definitely take a look there. Also, as mentioned, those endorsements are a critical place to look as well. There's endorsements ranging from things that are actually entitled pandemic disease endorsements. If you have one of those, you're in pretty good shape. They actually list a covered disease as coronavirus. There's communicable disease event coverages that are tacked on to restaurant and hospitality industry specific coverages. Those are certainly worth taking a look at, a deeper dive in, and seeing what you've got. So, I think the long story short is that you want to have a careful review of those policies in conjunction with the denial letter. The denial letter itself is going to offer you a lot of insight into what the carriers think their out is. And unfortunately, what I've been seeing is that denial letters is what we're seeing, regardless of whether or not a virus exclusion exists, regardless of what the civil authority coverage exists. This is an almost existential crisis for the insurance industry. And as a result, they're denying almost everything.
Thank you. Thank you, Tristan. So this being the hot topic, we're getting quite a few questions in this area. So let me kind of read off a couple of these questions and then either I'll respond or have the panel respond. So what is the Washington Hospitality Association's position on civil authority closure clause on the business interruption policy. We've all been denied the coverage from the insurance company. Is it worth pursuing? And I think the answer is that depends on your policy. Our position is civil authority closure. I mean, if it's in your policy, use it if you can. I mean, this is about survival, right? So our goal here is to make sure we create relationships, consultants here, exactly as an example here, that are online to help you through those reviews. So I think that's very important. And then why did the SBA PPP loan decide not to reimburse insurance coverage position to get compensation for insurance? And so the question is that really information correct or not? Let's be honest, that whole PPP was really designed for employees and to support employers, keeping employees informed or back to work and putting money in their pockets. What happens next is really yet to be determined. So, don't want to conjecture where things can go. At the end of the day, I think that the question is what steps are taken further. So hopefully that kind of answers some of your questions. Another question that maybe the panel here can help me with: most insurance carriers added an exclusion on business interruption for viral or bacterial pandemics, as well as civil authority shutdowns. Many restaurants thought that we were covered and did not, or paying premiums. Is there anything that can be done?
Do you guys want to start that one, or you want me to take a shot?
Tristan, start us up, and then we can color in.
Sure. Well, the the virus exclusion is certainly a problem. I'm a policyholder lawyer, but I don't want to diminish the fact that can be a real issue and may have the courts ultimately decide that there's no coverage. There are arguments that virus exclusion should not apply in the civil authority context. There's also arguments that if the efficient proximate cause of your loss is the governmental authority shutting you down rather than a virus, that in Washington state in particular, coverage should be provided for that loss because that is the predominant or efficient cause of your loss. That's getting pretty technical and lawyerly, but there is an argument out there that I believe is credible. How credible that is, what your odds are once again going to be determined based on your policy language. So they're out there, they vary in strength. But certainly lawyers like me and the whole policyholder bar is looking into what we can do to try to get around those exclusions.
Thank you.
Yeah, and I think there's some historical here that I think is important. When we had the SARS outbreak, it did impact underwriters in various parts of the United States and throughout the world. These virus exclusions came from that SARS outbreak, so there was an intention by most underwriters to exclude future viruses.
Interesting. Next question. All of my mall leases contain clauses about insurance for insured events and non-insured events or casualty. Trying to shorten this a little bit, but is there an official definition of casualty event? Basically being able to open, does that affect the ability to potentially collect here?
Well, I'll take a first stab at that. You're gonna have to look in your lease, obviously, for what the definition of a casualty event is. Most of the chitter chatter amongst people who do, and I'm not one of them, who focus their work on commercial leases, is that it's going to be tough to fit into a casualty event definition. Most of the success I've heard about from the people I work with who do commercial leasing involves a proactive conversation with the landlord where both parties are reasonable and kind of have a we're all in this boat together attitude. If you got super legal about it, again, you'd have to turn towards your lease and look at all those definitions. The one thing I would say that is overarching is that I feel like the courts in general are not going to be sympathetic to people who don't act reasonably under these circumstances. That said, if you've got absolutely black and white language in your lease that does not allow abatement of rent, that's going to be a serious issue that you're going to have to contend with.
Okay, thank you. The next question, I think, follows along GA. Where I won't be able to answer this, but the question is what is the association doing in the aspect that business interruption is being denied? Our government affairs is obviously taking a look at what options can be done, both on a national level and a local level. However, we have not taken any official positions. At the end of the day, something that's very important for us all to recognize, and obviously we got to survive today, but long-term in business interruption, probably the biggest claims are fire and water damage, some kind of flood or water damage. If we somehow force into the aspect of claims that really break an industry or break carriers, or force in the aspect that it's not a choice to have this type of coverage in the future, then we've got to be very aware that that average cost could go up 100-fold, right? You might be paying, let's say on an average, $5,000 or $10,000 a year right now for one particular location for coverage. Does that move your coverage up to $20,000 a year? Because, and especially, you can't buy fire insurance right after fire. It's going to be very expensive. So all those things really have to be considered, and those things will be addressed as time is moving along here from a GA level. But at the end of the day, we don't have those answers today.
Ken, can I just jump in real quick just to kind of give a bit of perspective on that question around, what the legislator is doing and what the association is doing. So outside of the association, I just think it's important to know, and I've found it super interesting that there's been public commentary from both political parties around this issue, and it in certain regards is bipartisan, in that there's a number of Republicans and Democrats that support forcing this issue a little bit and trying to go down this path. And then it's interesting because there's divides within both parties that are saying, hold on a second here, do we really want to do this? And so an example, last Friday during his daily update, President Trump mentioned that he's bought business interruption and it feels weird that they're not being paid, and kind of took a shot at insurance companies on Friday afternoon, the same day that our rep, or one of our reps here, Pramila Jayapal, had written a letter that was basically the same thing as President Trump. And obviously those two people couldn't be any further apart politically, but they both essentially took a similar tack. So every day it changes a little bit, and there's movement on it, and there's people that make statements about it. And there's a groundswell right now. I mean, I think it's important to acknowledge that this is incredibly fluid, and we don't really know where that might play itself out, but there's definitely conversation happening about state, local level, as well as the federal government level. So just good to know that.
Okay. Here's a one for you, Tristan. Our request for loss of business has been denied by our insurance company. They do write if and or any correspondence or communication from any government entity other than civil authority, so quote unquote, might have any bearing on resubmitting the claim. The question is, what does that exactly mean?
That's kind of standard, just cut and paste stuff they put in the bottom of all their denial letters. It's sort of being nice to the policyholder. We're not closing the door completely. If you had a whole different set of facts, we'd consider it. But really, it's just a pro forma thing they're putting down there. Really, probably what's going to have to change for that is that someone's going to have to litigate that policy form under similar facts. And once that carrier loses on that, then all of a sudden the door is going to open for everyone standing in the same shoes as that policyholder. And those suits are going to be filed inevitably. That's the future. But unfortunately, I don't think that there's some magical set of facts you could put in front of most carriers that's going to change anything materially. In fact, this is one of those rare circumstances where I think that it's going to be really tough for your typical very good brokers teams to turn things around, just because if the insurance carriers pay one claim, they pay 10,000 claims, and they lose $1 billion in Washington alone, let alone throughout the United States.
Okay, thank you. This was kind of a little different than business interruption, but it's kind of a part of it. It might be mixing two things here. So if we're leasing a restaurant because the restaurant had to shut down, it has a loss business, our real estate holding entity has lost income because they cannot afford the lease. Is that considered business claim to us as the lessor? Now, the way I'm reading this is that you have your restaurant in one entity and your real estate in another. And if that's the case, you can't mix the two policies. What's the policy under your real estate holding? Would that be correct? Tristan, what's your thoughts on that?
I agree. You got to look to see who is the policyholder who suffered the loss and what does their policy say. If it's your real estate holding company, then you got to look at the real estate holding loss. I think ultimately they're going to be looking back to the same thing though, which is that most commercial property policies are triggered by direct physical loss. And most of them have some form of civil authority coverage and they have some form of virus exclusion. So that it's in itself is going to have to contend with those same issues that are likely very similar to what the nominal tenant is dealing with.
Okay.
But Ken, this is Jim.
Yeah.
For that landlord, there is usually a component in the business insurance or business interruption called loss of rents.
Okay.
So they'd be looking under that section more than likely.
Okay. Excellent. Thank you. Great feedback. Let's move away from business interruption. By the way, you can follow up with we'll give you some resources to make sure you have access to us to ask additional questions, and you can get some more support from actually these consultants here online if you need. Let's move to adjusting your policy. This is probably the next most often asked question. Are there steps members can take now as it relates to the current policy and reducing their premium cost? Jim, do you want to take that one?
Absolutely. Let me kind of break this down into a couple of steps and kind of tell you what we've been doing for our clients. If you're 90 days out or less to your upcoming renewal, you want to talk to your broker and strategize about how you show your renewal information to your underwriters. You should be aggressively re-estimating your 12-month forecast based on the impact to your situation, whether you're shut down, whether you're significantly reduced in your revenues, you're no longer selling alcohol, etc. And we're encouraging our clients to not necessarily look at the last 30 days, but to look at potentially worst case scenario, how long it might take you to get back up and fully operational. And that could be late summer, early fall. So again, if you're within 90 days of your upcoming renewal, work with your broker and readjust those estimates for sales and payroll based on kind of a worst case scenario. I would take that into late summer or early fall. Second, if you've already renewed your policy or if you're in the middle of your policy period, you're not getting ready to renew it, again, talk to your broker. Many insurance companies are allowing midterm adjustments to the exposure basis and not having you wait until the end of the policy period and through the audit process. Not every insurance carrier, but some are. And again, what we're doing is we're sitting down with the carrier, with the client, and we're talking about payroll and the other exposure adjustments where your policy is rated on, and we're making those adjustments so that your midterm premiums can be reduced. So that from a exposure standpoint and premium, that's that piece.
Okay. So Jim, what about, I've got my restaurant closed, right? I'm not doing anything right now. There's no business going on, except for, someone, the restaurant could burn down or something, but at the end of the day, there's really no exposure. I think a lot of these guys are looking at how can that premium today be lessened a little bit, or what should they be doing to talk to their carrier and broker today about the fact that I'm not even open, or I'm not using my liquor license as a great example. There's, I think, different pieces to that, or a catering company that is carrying coverage, but at the same time, they're not catering.
Exactly. So again, there's kind of the premium based on your exposures that you can attack. And then there's also the coverages themselves, like you outline. We have been seeing clients working with us and with their insurance companies to maybe reduce your umbrella and excess limits. Maybe you're what they call laying up your automobiles, where you're not going to use them at all. You've got them garaged. Nobody will have access to them. There are insurance companies that are working with their clients to get rid of that coverage temporarily to help reduce those premiums. The only caution with that, and what we've been very careful with our clients to do, is to really understand where those coverage limits or features might have been driven. You might be carrying a certain umbrella or excess coverage because your lease requires it. Or if you're doing catering, it's because some of your clients were demanding those excess limits. So you'll need to go back through your contracts and see if that was driven contractually and legally, or if you have more of the ability to change those coverages. We're actually working with a client now, a fairly sizable retail operation, that it's required under their contract with their landlord to carry a high excess limit. The landlord is actually allowing an addendum to allow our client to reduce their umbrella significantly during this shutdown or period where their operations are literally ceased. So I think it's, again, working with your broker and your carrier on different strategies.
Yeah, and I'll even as far to say this, and maybe this is too aggressive, but at the end of the day, I mean, that the association's got relationships. This is a great example of, some people that we work with that help our members every day on insurance coverages, legal questions, and et cetera, et cetera. Utilize the relationship that you have with the association. I mean, whether it's a current policy and you need someone to take a look at it because you don't feel it's fairly being reviewed, or whether, your carrier's not working with you and you really need a new carrier. I mean, this is part of what we do every day to support our members. So you don't feel totally trapped, even though I mean, I can understand, and we all understand how you're feeling that way today. But at the end of the day, there are options, and utilize us as a potential option. Again, this is not a sales point. It's the fact of what the association, we do here, what we're here for, to support our members. Whether it's in a program that we provide, or whether that it's in somebody else's program and that you need some advice on. So don't be afraid to reach out, and again, utilize the association's resources to give you that second opinion and or to help you. You're not locked. A lot of times we feel like we're locked into things, and a lot of times we don't realize we're not locked in at all. What we really need to do is have someone take a look at it and see what your options are, and explain those options to you from a professional standpoint of view, and let you make your decisions. So with that, unless anyone wants to add anything to this subject, I'm going to, let's see, we just went through adjusting your policy. I don't have any additional questions there. So I'm going to go on to the insurance commissioner's premium grace period. Does anyone have anything you want to add on the panel before we move on? Okay. So with that, the OIC premium grace period, Patrick, what our members need to know about the OIC emergency order 2020-03?
Thanks, Ken. So I believe it was late last month. Everything's kind of bleeding together at this point. It's been such a whirlwind, but I believe it was late last month. The Insurance Commission in the state of Washington issued an order to all insurance companies operating in the state that basically said that they're not allowed to cancel any policies for non-payment of premium for 45 days. So off the bat, it's a good thing for policyholders. They're helping cash flow and buy some time from a premium perspective. If it's something you want to take advantage of, highly recommend you reach out to your broker. Depending on how you're billed for your policy, there may be some nuance to this. Some insureds need to finance policies, and there's a third-party financing company that's involved in it. Sometimes you're billed directly by an insurance company, and the billing relationship doesn't involve the broker, so they may direct you directly to the billing number from whatever insurance company you work with. But all of them are responsive to this order, and what you just need to do is, when the bill is due, you call and say, I know there's a grace period and I'm experiencing impact from COVID-19. I can't pay right now. And that grace period exists until May 9th. And at this point, we continue to monitor it. It's extremely, this entire situation, I keep saying, is very fluid, but that's one that we think is fluid too. And on the back end of it, if it doesn't get extended or it doesn't go past May 9th and you're still having trouble paying premiums, highly, highly recommend you have another conversation with your broker for the next payment and say, is there anything that the insurance company can do to further help me? I'll tell you that none of them are going out and publishing a broad guideline that says we're going to give all of our insureds a bunch of time to pay premiums. But if you position it with that insurance company, there may be some flexibility beyond May 9th as well. And it's just another thing that, you're not going to get what you don't ask for in that situation, but highly recommend if you need it to ask for it and see what you can get done there.
Great advice. And we'll of course be communicating out if they extend that order to everyone. So, keep an eye on your emails and the Washington Weekly and those type of things for any extensions, because, obviously we're all looking to extend this is especially depending on what comes out of relaunch and how long that takes. We all need to extend that relief. So just briefly, right? File that claim. It doesn't hurt. If you got business interruption, documenting your losses. You might not have that. They might be denying that today, but that doesn't mean that that's the way it's going to end up standing long term. You still have that, the potential legal recourse and review as well. Never know what's going to end up happening with the civil authority coverage at the end of the day here. And then, you've got to make adjustments with your broker and with your carrier on the business moving forward. I mean, obviously things have changed. So should you be taking a look at doing adjustments to your premiums? Absolutely, you should. And you should get consultation and good advice on that. Moving on, let's move on to delivery. Delivery coverage food delivery coverage is very important. Started delivery back in the 80s. So I didn't have insurance, and gosh, you find out how important that is as soon as one of your employees get in an accident. But there's a lot of conversation about delivery coverage. Foodborne illness, if I'm using a third party, I don't know that we're going to cover a lot of that today, but that's something you should be considering if you're using one of these third party insurance companies. If I'm using third party and I want to use my own carriers because I don't want to, I think I might have said this at the beginning, but I'm getting hit 30%, 10, 15% for the marketing fee, and then another 10, 15% to use their delivery persons. Can I use my own delivery carriers, my own employees for that? Absolutely. It allows you to employ your own people. However, you do have to be making sure that you're following up and getting coverage. So with that, Patrick, if a member is not previously offered delivery service, now they jumped in, or they're going to soon jump in, and they're considering moving forward with a third party service, what's the risk? What should they be looking at?
Absolutely. I think the first most important thing to be thinking about is it our employee that's going to be the person driving a vehicle on the road, and then who owns the vehicle? In most cases, when we see first party, us doing the delivery as a restaurant, it's the employee driving their own vehicle. And so there's a coverage that exists, and many of you probably have it already. And I want to caveat that many of you probably have this coverage. It's called hired and unknown auto, and it's liability coverage for the business only, for any liability they incur from an employee operating their own vehicle on behalf of the business. So hired and unknown auto traditionally is offered to owners for incidental exposure, running to the bank. Hey, we ran out of butter. Someone's got to run to the grocery store for dinner service, and little things like that. Generally, an underwriting question that you sign an application is do you perform delivery? And if you've signed an application that says, no, I don't perform delivery, and now it's April and we need to perform delivery, it's really important that you connect with your insurance company. Many of them have either been forced to or have just known this question was coming following the shutdown and have said, we're going to give coverage and we're going to make sure that our insureds can deliver food. They do have underwriting guidelines. Insurance companies are a little scared of, the 18-year-old employee who had a license for a year and drives around on a cell phone all day just doing deliveries for you. So they put guidelines in place that you need to check and make sure you can meet. And they come into two pieces that are really important. First, they're going to require some type of insurance limit that your employee needs to document back to the insurance company that they carry, their own personal insurance, and understanding that if they get in an accident, that personal insurance is going to be what responds, and that employee has a financial responsibility to use their insurance and to potentially have a deductible responsibility as well. The hired and non-owned auto piece only comes in when the claim gets filed by either them or the person they get in an accident with, and the adjuster says, "Hey, what were you doing?" And they said, "Oh, I was delivering pizzas for Ken Wells's Pizzeria." And they say, "Oh, I'm going to go call Ken Wells's Pizzeria, and he's getting looped into my claim today." And Ken, they're going to come to you and they're going to say your employee got in an accident, and you're going to trigger hired and non-owned auto. But if your employee's vehicle's totaled, that's his insurance. If he's injured, that's not related to hired and non-owned auto. This is just liability for the business. So if we're going down this route and we're going to have employees on the road, and this is true whether we're talking about COVID or anything else, and you want to be allowing employees to deliver, there are some best practices that we highly, highly recommend you follow. First and foremost, anyone that's going to be delivering, you want to see their motor vehicle record, and that can be part of the employment application process where you require people to provide an MVR. Many of our clients take that approach where it's the responsibilities on the employee. And then other times, our clients just do it themselves and get permission from their employee to pull that report. And the big key there is making sure we understand who we're allowing to operate vehicles on behalf of the business. We've seen some really nasty claims over the years relating to a term that lawyers like to use called negligent entrustment, meaning back to Ken Wells's Pizzeria, if he sends that 18-year-old out on the road and that 18-year-old already has a DUI to his name, and that 18-year-old goes and gets in a terrible accident while working for Ken, that's bread and butter for a good plaintiff's attorney to go and say, you let who go deliver pizzas for you? And that claim's going to get a lot nastier than if you had a guy who had never gotten in an accident before getting a fender bender. And so it's just super important to know who we are allowing to do that, and then to make sure that they know what their responsibilities are as a result of them being on the road for your business.
Great. Excellent. We've got some questions here that have popped up all of a sudden, so I'm going to bounce you guys around a little bit. Before I do, I want everyone because you can find a lot of this information actually, especially on food delivery as well, on our hub. It's called hubhospitality.wahospitality.org. hub.wahospitality.org. If you go under operations and best practices, or you type in food delivery, we'll give you some information on that, on making sure what your employee you should be requiring from your employer, and then the discussion with your insurance broker and carrier. A couple questions come up, guys. I'm going to toss out there. And then we're gonna wrap this up. Should we? I think I have the answers, but that's what the panel's for, right? Should we lower our sales estimate for lower price on insurance this year?
And the answer is yes.
Okay.
Be aggressive with those exposure bases, your payroll and your sales. That's traditionally what most hospitality accounts have their general liability rated on. There's other components as too. We've had a couple of clients do very conservative adjustments, assuming they might be open early May. We're telling our clients, think of worst case scenario. When will you actually be back to where you were before? If it's good news, if you're back up early and your sales, begin to really rebound, that's fine. You'll pay those premiums at the end of the year in your audit. It doesn't make sense to pay them as much up front. So yeah, be aggressive with those estimates, assuming we're probably looking at summer or early fall before all of us are back to somewhat normal.
So I know we'd previously answered that, but again, that is probably the biggest question we get. And I think this is in some aspects similar. Has anyone received any business income reimbursement due to COVID? And if so, what policy? Can anyone be specific about that?
I have not seen any claim accepted so far.
Okay.
I've seen claims not be denied. So there's certain insurers that have denied blanket denial based on no investigation across the board. Liberty's done that. Berkeley's done that. Hartford's done that. The list goes on and on. Allianz, interestingly, which has issued a bunch of restaurant policies, is holding off for now. But I haven't seen anything that's an acceptance of coverage. I've only seen a lack of denial from certain carriers.
Okay.
Yeah, and Ken, across our entire client base, so even getting outside of hospitality, for the 300 to 400 claims we filed, we've had 3 claims paid. None of them were hospitality at this point. They were healthcare, and they actually, back to the comment earlier, they had communicable disease coverage added to their policy. However, it was not under the business interruption. The underwriter still denied the business interruption claim. They only paid what they call a sublimit, a small amount that was listed under that communicable disease coverage.
Interesting. Should we ask our landlords to review their coverages?
Yes, it's the same. I mean, this is, you don't get what you don't ask for. So in that lease, there's going to be a series of requirements that may relate to liability limits. It may relate to some ancillary coverages. Every once in a while, they make you carry, employment insurance, which you want to have employment practices liability, but check and see what that limit looks like, and then make a risk calculation to see if you're carrying more than you need to. But in general, you want to start the conversation by saying what if any flexibility exists as it relates to insurance requirements. I think Jim touched on it earlier. I think the place that might make the most sense to go right now is to your umbrella limit and see what that looks like, because there's obviously less exposure taking place at the restaurant level, and they might be requiring $5 or $10 million there, and they might be willing to cut that in half until things come back. So you don't get what you don't ask for, and that's a great question to go ask your landlord.
Okay.
Well, let me take it from a slightly different perspective too. If your lease has a waiver of subrogation to the extent of property insurance, that means the claims against the landlord and tenant are waived to the extent that there's event that's insured by property insurance occurred. Where, again, I think that you're going to see a denial across the board. Your landlord hopefully is making that claim. And if that claim is accepted, there's an argument that the tenant doesn't have liability to the landlord to the extent of that property insurance claim. So again, no reason to not make that claim. There's absolutely no harm in doing that.
Okay. Here's an interesting one, and I'm not going to give you away because if I tell you too much about this, you will know exactly who asked this question. I have 2 places identically the same. They're both with Allianz. Our broker has told us that our policy is not covered due to the pandemic. However, both places have filed a business interruption claim. One of those places has heard from an adjuster. The other hasn't yet. The one adjuster has asked for a lot of information, none of which has to do with the shutdown. What's your thoughts? Yeah.
Well, I can take a little shot at that. I've been looking at a lot of Allianz policies. I've got a lot of clients who are insured by Allianz. Allianz, for the most part, is doing an investigation. Now, that investigation appears to me to be more of a fig leaf for a future denial. In some of those interviews with my clients, they've sort of tried to convince the policyholder that a virus isn't really direct physical loss, right? So it's sort of soft selling this future denial. That said, Allianz's policy, from having reviewed that one specifically and in great detail, their civil authority coverage is not written like everyone else's. And so for that reason alone, maybe Allianz is taking a little bit of a different view. And furthermore, they offer a lot of industry specific endorsements. So I think Allianz could be feeling the heat there that, if I provide a coverage for something called a communicable disease event, I feel like I've got to at least really, check my boxes before I deny coverage. So I think that might be what's going on there. I have no idea why you'd take, a single entity's claims relative to 2 locations, assign them to different adjusters, and have the adjusters do different things. That just seems like poor claims handling.
Okay.
Look, can I jump in on that specifically? Because
Absolutely.
we write a lot of Allianz policies, and I've been involved in a very similar situation. It's not this one, I don't think, but a similar situation. Allianz uses third parties to adjust their claims. They don't adjust their own claims. They hire a third party adjusting firms. And so we've seen the same inconsistency between adjusters that Allianz has hired. I think that may be partly the reason as well.
Okay, great answer. Thank you. One final thing. It's a question about a specific broker. I don't want to answer that online. Feel free to reach out to me directly. My email is kenw@wahospitality.org. I can tell you that sometimes relationships change and recommendations change, just based on some companies are bought and sold. So at the end of the day, if you'd like a good recommendation on responsiveness to your policies and to support, feel free to reach out to me directly. I'd be glad to help you and make good recommendations to those that are doing a good job today in the marketplace. So with that said, I'm sorry about being ambiguous about that, but I did want to get a response back to that person. Anything else that anyone wants to add here before we drop the call?
The only thing I'd add is on the documentation front. We don't know yet what's going to be required as far as showing direct physical loss, whether or not the orders from the state themselves kind of prove up direct physical loss for policyholders, or whether or not you're going to actually have to show you had a virus event at your restaurant or somewhere within usually a mile of you or some distance that's in the policy. Documenting those events, talking to your neighbors, finding out if they had those events, might as well do it while everyone's talking about it and having that information documented. That's, one form of documentation. Then obviously it's also your losses. If coverage winds up turning on those things, it'll be good to know them now.
Well, I want to thank everyone for being on the call. Thank you, members, for being here, and thank you for your support. We're providing you some good information back. File that claim, make your adjustments, and if you need assistance, reach out, let us know, and we'd be glad to do what we can to help you. Next week, we'll, at same time, same channel, so to speak, we'll be doing one on healthcare. And again, I'd like to thank Jim and Patrick and Tristan. Thank you guys for your time and your expertise and your support to our members, both the past, today, and really tomorrow. So we appreciate you guys on the team. So thank you all very much. And with that, we're all going to have a good day. Okay. All right.
Thanks, guys.
Guys, thank you. Appreciate it.